Welcome back. I hope you're having a fantastic day. It is March the 3rd of 2022 and markets are all over the place once again today. Let's take a look real quick and see what's going on. And again, I have the comments disabled because there's just so much scam/spam bots out there. You just can't keep up with them. We get literally over 100 spam comments on every video. As well as all the great comments that you've been leaving. I really appreciate that. A lot of great comments, a lot of great feedback. People are really enjoying the channel and the videos on the different topics that I cover. But anyways, just cannot keep up with the spam comments, and I do not want anybody to get caught up in anything like that. So I'm just going to leave the comments off. As long as the videos are getting to you, then we are okay. And actually, some channels have been taken down because of those spam comments and spam bots, with people reporting them and things like that, and reporting the channel and stuff like that. So anyways, I'm just going to keep them off for a while, and hopefully YouTube can figure out how to stop that stuff. Markets were down a little bit this morning, and then they rebounded and they went down on Chair Powell's talk today, a second day of testimony, when he said that the Fed may have to get a little more aggressive. And then by the end of the testimony, basically what he said was the same thing he said yesterday. We're looking at a quarter-point rate hike, reducing the balance sheet at some point, don't know when, don't know how, and that they were wrong about inflation. They used a textbook definition of how to react to what was going on, and which was basically do nothing. And they now realize that that was wrong. So very productive 2 days of saying absolutely nothing. And again, it's not what they say, it's what they do that really counts. So we'll just have to wait to see next week after the inflation print comes out. And when the Federal Reserve Board meets, the different members are saying a few different things, but there seems to be a consensus of a quarter-point rate hike. So that's definitely looks like it's actually going to happen, unless something really, really big and terrible happens. But at the end of the day, they realize inflation's out of control. It's only going to get worse with the war and things that are going on, oil prices hiking, stuff like that. And of course, the market is optimistic on talks between Russia and Ukraine right now for passage for civilians that want to get through safely. So there seems to be some sort of an agreement there. So markets, mid-afternoon, a couple hours till the close, have pulled back a little bit. And again, NASDAQ is still down quite a bit. Well, not even 1%. S&P is up a little bit, flat basically. Dow is up 0.32. So again, you got to watch into the close. That kind of gives you an indication of what's going on, is how the markets shut down at the end of the day. So really, all eyes are still on Russia-Ukraine situation. Hopefully, that can be brought to a conclusion soon. And it's just such a terrible thing that's going on over there. So let's take a look at Bitcoin. We've been following, this is Bitcoin Fractal Week. We've been following a couple of different fractals, and I've been kind of tracking this price action here that we had from the 20th of January through the 10th of February, where the price went through kind of the same pattern it's going through now. And what I feel like is Bitcoin did not consolidate here after that first leg up. The percentage increases are fairly close. That was about a 15% rise into a consolidation. Bitcoin pumped, I think, a little bit more over here, about 18%, and just kind of skipped through that consolidation. It had a little bit of a bounce there, getting through it, but just kind of broke right through it. And now we seem to be skipping right to this little point here, where Bitcoin kind of rolled over and dropped off. So we could potentially be looking at something like this. And what was that drop? I think we looked at it yesterday from the peak. Initial drop was about 10%. We're not quite there yet. From the peak down about 7%. And then more particularly, a couple of things could be happening. If we're following this pattern over here, Bitcoin had this area where it peaked, kind of consolidated up, peaked, and then dropped. So Bitcoin came up, peaked, consolidated, peaked up again, kind of exactly like what was going on over here, and then dropped, and then rose up and dropped again. So this seems to be more of a consolidated pattern phase compared to what happened over here. This one over here was about let's see how many days that was till the drop. That was about 27 days until the drop from that whole area of movement and consolidation. So where are we at now? Somewhere around 14 days. So it's about half as much. So right now, this was a lot of short liquidations. And then of course you get a little bit of long liquidations now, because what happens is everybody wants to go short down here at the bottom, and they want to go long down here at the top. And it should be the other way around. You should be going short here, not long, and you should be going long here, not short. And people tend to get that backwards a lot of times, thinking that when we're down, it's going to continue to go down, and when it's up, it's going to continue to go up without any volatility. And if you look at Bitcoin on the daily, again, the ranges that we're tracking and the trend lines, and it's interesting how these trend lines can work, but we've been kind of tracking this trend line here lately. So we'll draw that in real quick, and looking for Bitcoin to come back down and back check this trend line right here to see if we're going to get continuation into that retracement. If it breaks through, then that pattern and fractal that we've been kind of following with several other people on YouTube, with that 2018 bear market fractal going into a retracement into the $55,000 range, that 618 to 702 retracement from this downtrend here. So that will be your confirmation to watch out for. We should hit this pretty soon, could possibly hit it today. But what we're looking for is the potential for price to bounce here and then kind of go off into that retracement that we've been talking about, and then roll over and into a little bit more of a bear market consolidation. The question is, where's it going to go from there? And then we have our macro trend line that if that happens, and this is all ifs and probabilities, obviously none of this is certainty. This is just looking at price patterns. There we go. Trends and ranges is what we're basically looking at. So this is your next trend line here. Major market support, structural support. Let's get that little trend line in right there and right here. So what we're looking at is to see if price does come up to that 618,702 and roll back over, your next trend line will be right here. And that's the line in the sand that we will see. Does price hold or does price reject? And of course, if that scenario does not play out, we're going to know that real soon, then what we're looking for is price to come down again and test this trend line here from the recent breakout that we have seen. Kind of bring that up a little bit. And if it breaks this trend line, which is right around the $41,000 level, plus or minus, see if price breaks through there. That's been this area of support and resistance along the way. Right now, it's been flipped into support, whereas on the way up, had a little bit of resistance here and there, but it's basically, once it breaks through, it's been support for this range right here. Let's go ahead and draw a line through there and take a look at that. So it's this area right in here that's been kind of a little macro support at that $41,000 level. So waiting to see if price breaks through that. If it breaks through that, it could go down and test this lower range again down here. And then we will ultimately see where price will be headed potentially after that from where we're currently trading right now. So it's really up in the air right now. A lot of uncertainty out there. A lot of it hinges on what the Fed does next week. If they come out exactly as predicted, quarter-point rate hike, really nothing else on the table anytime soon, then markets will continue on, and then they're going to be reacting to the news of the war. Whenever there are peace talks or potential peace talks, markets will rebound a little bit, and then based on the result of those talks, markets will react. So again, the key is going into the close. We want to see strength into the close. You want to see buying into the close. And if you see, if you see markets pumping into the close, that's a good sign. Could get continuation. If you see markets dipping into the close, then you could have some continuation there. But really, a lot of uncertainty right now. You can't really predict anything. You just got to keep your eyes on the markets and protect yourself. Understand the risk to the downside. Understand the potential to the upside. And I will keep you posted as things progress. So I hope this video helps you, and I will see you on the next video.